button as well. So today, I'm really excited because we've got our Perth update. It's been 6 months since we've had our last investor market update. And as I say at the start of every session, nothing is frustrating me more than the media talking about the market in, general terms, potentially getting investors that aren't living in the market a little bit hyped up with what's going on. And it is becoming a bit of an issue when it comes to renewals and vacancies and expectations. So I always say you need to listen to the people on the ground living and experiencing property management every day to really find out what is going on so that your expectations are aligned by the people that is doing it and not the people reporting on it. So it's with my pleasure that I've got my favourite people on today, because I've got Sharon Clements, Deb Gidman, and Alicia McCulloch, which are some amazing property managers here in Perth. So we are going to get straight into some questions. Now we've got a few people on today, which is really great. So I'm going to start today let's start with Alicia. So Alicia, can you just give me an idea of what home opens are currently looking like for rental properties? And are you seeing a difference in terms of the numbers attending different properties?
Definitely. I would say I'm only really getting a handful at a time. Not the big, 30 people that everyone's saying. I'd be lucky to get anything over 7 to 10 per home open. But I also do quite a few home opens and call people to book in time that suits them as well. I don't just rely on a home open solely. I find I have more success making individual appointments now because it's harder to lease at good prices.
Yeah. And Deb, what about your area? How are your home opens going? Are you seeing a difference?
Yeah, well, I just quickly jumped on realestate.com before we came here because I speak often about my little area, which is Baldivis, and the sheer number of properties. So we have got 88 properties for lease right now in Baldivis. We have 18 in Port Kennedy, and 16 in Warburg. So that's a sort of 15-minute drive away from each other, but completely different areas. So I'm really in Struggle Street in Baldivis, and especially because we've got so many new builds coming to the market. And what's happening is they were building their property 12, 18 months ago, and maybe were told a rent at that time. And now they've come to market and we're having to be strategic. In fact, I had my first investor come to me yesterday and say, how about we offer a week free rent? So we haven't heard that for some time. And it kind of just piqued my, okay, that's interesting. Maybe that's something we have to start thinking about.
Yeah. Over to you, Sharon. And if I can get you to comment on the sales as well, because I know you've had some recent sales with investors. So I'd love to sort of hear what's going on a little bit in that market and also the home open market.
So I'll start with the home open market first, just to pick up from the other girls. Definitely seeing a reduction in inquiries. So that's across the board. Things are still leasing, for me personally, quite quickly, because again, I do things differently to how everyone else does it. And I've been saying it for quite a while now, the quality of those applicants is definitely not there, So, for lack of a better way of putting it, to not being politically correct about it, the quality of what we've got left in the market for availability of tenants is the most, it's awful to say it can't bluff, but the majority of good people have got housing. What you've got left is the people that are struggling to get housing, and they're the ones you're having to really, really be careful when you're sifting through your applications, so that says that there, but there's still plenty of good people out there, but you really do need to make sure you're thorough with those applications and your tenant processes as to exactly who you're getting, so from a sales point of view, I've done 3 sales in the last month, and the most outstanding one was the one we sold in Kenwick Street. Now, that property, when I appraised it 3 months earlier, the market moved 100K in 1 month, let alone 3 months. By the time we listed it at 650. On the day of the home open, we had 98 people register on the day. Now, we had 12 pre-registered. We had no idea that it was just going to go completely off. It ended up blowing up on TikTok and becoming Insta famous because of that many people there. That property ended up going for 125K over the asking, so to the point where we've actually, as an agency, we've sat down and said, did we actually underlist that property? Because that's the first thing we start getting accused of as agents. Did we underlist? No, we didn't. On the day we had 48 people bidding, and we had putting offers in, and we had offers increased by $100,000 on the day. So we had everything from people who were wanting to offer below the actual listed price to people who were first home buyers with no finance approval, nothing, offering $800,000 for it when we listed at 650,000. So that was completely unexpected, So, but again, the two sales I'd done prior to that, I was noticing that pick up. The couple of investors that I did speak to that were interested in it, the two investors that I spoke to that were quite serious, when I also said to them that the property needed to be painted, they needed a few renovations done before you put a tenant in it. One of them, their exact words were, "No, we just want to rent it out exactly as it is." I'm like, well, then I won't be managing it. So it's one of those things where we don't want to be we don't want to be taking on properties that you're picking up, trying to pick up cheaply and then not want to actually put back into a good condition, do the work required. You need to set those properties up so that you've got nice, clean, well-maintained properties, because if you don't want them back in that condition you're leasing them out in, so you want to set those properties up to be presented the best way possible. It makes it a lot easier for us as property managers to actually then manage those tenancies, because we've got a clean slate to work from, and it means we're getting better tenants. So if you put poor quality properties on the books, you're going to get poor quality tenants.
I think the problem that we will find is that a lot of the investors in the market currently have never been investors through all the different cycles. And so it's really just an education piece. So sure, they've come into a market where they might have gotten away with not having to do, a paint and things like that. But just because that was the way that it was in the market, 4 or 5 years ago, doesn't mean that that is the same mentality we've got to go. Just as us property managers have to, go through the cycles, like we've been through the cycles, all of us have been, where we've had rent reductions and had to negotiate 30% less. Owners haven't actually experienced that. So please, I guess for those that are listening, understand that that's why you appoint a property manager to move with those cycles, and understand that it doesn't always go in the direction you want. It does go up and down. Over to you, Elise. Yeah.
Yeah, sorry. I was just saying, things are definitely plateauing, so yeah.
Alicia, can you talk to us about what you have seen with any lease renewals? Are you seeing lease renewals stay stable, going up, going down? What do they look like at the moment on your books?
We're probably looking at trying to keep them the same, because when they were rented out originally, they're probably a bit higher than what it was now. But also recently, I found that a tenant requested a rent reduction, and it's not worth the rent reduction. The rent's actually at a good price, but their values for the property had changed. They no longer had the adult children at home. They no longer needed this huge property. So they wanted the rent reduction, but it's more saying it's not a suitable property for you now. So it's just having those conversations. But yeah, rents, I'm not really putting them up at the moment. I'm just probably trying to keep them the same. Always doing a CMA, but probably the same. I'm not sure about the other ladies.
Yeah. Well, what about you, Deb? I want to ask you that question, but I also want to actually no, answer that question, then I'll tell you. So I'm not giving you too many things.
Yeah. So obviously, like I say, I hate to harp on about Baldivis, but just because of the sheer number of new builds that are coming and the sheer number of properties, those ones we're not recommending an increase at all. unless they're the really bigger properties, the 700s, 800s, there's maybe some room to increase there. But the 650s, which is the sort of average in my area in Baldivis, no increases. But like I say, move towards the coast and those where there are still fewer, it's supply and demand, fewer properties for rent. And people don't want to be moving. So yeah, maybe still $10, $20 a week increases in those areas.
For people that are looking to buy, or if they have an investment in an area that does have a high stock level of rental, what sort of number on the rental market on realestate.com do you consider like regular or normal? And what would you consider high? Like you said, Baldivis has got 88, so obviously that's like super high. What would you say is a good amount to have of stock?
Well, are we talking good for tenants or good for investors?
Good for good for investors, yeah.
Sort of around 20 or less is great. Like I say, of those 88, 60 are 4x2s. Like we're churning out those 4x2s like nobody's business in Baldivis. And so when you're competing with 60 other properties with your 4x2, we're having to get a little bit creative. We're having to look at the rents that we're going to market with a little bit under, and saying to them, like you said, Ash, ride the wave. At some point, things will change. But there is no point sitting with a vacant property for 4 weeks because that is not helping anybody. Like, let's be really strategic about it. Let's put it on. Might be a bit of a pill to swallow because you less rent than what you budgeted for. However, a tenanted property is bringing money in. And like Sharon said, because there's not numerous applications to choose from, we need to get a good quantity of applications in so that we're able to find the best tenants for you. So don't be too stuck with that rental price or that figure that you had in your mind. Be flexible. Know that at some point it will come back around and you will potentially be able to increase at some point.
Yeah, I think this is the thing. Like a lot of investors and property managers, they they give the CMA, which is fine. You need to do that, but that's not the sole thing that we're basing our decision on. We're basing it on other other things like the supply and demand, which will be what's the stock level available. If that tenant was to go out and look for something else, could they find something a lot cheaper? And then, like you said, taking into account that whole the holistic side of things. I say to my clients all the time, and there's someone here that I've probably said this to, is that the only person that actually wins in a tenant vacating is sort of the real estate agent. We're the ones that are getting the fees, getting the marketing. It's not actually beneficial to the agent, so to the owner. So in most situations, if you've got a good tenant, like we do want to keep them there because we know that that's the best thing for you as an investor. It's not that we're choosing the easiest option. It's the best thing for you. Now, Sharon, can I just come over you for a minute? Because I remember you said something which I took a lot of value from, and it was probably, there's a lot of things I've taken a lot of value from, but this one thing was a couple of years ago, I think it was, and you said to me, Ash, investors won't get the chance to, they're not going to get the high rents forever. Let them take advantage of the market when they can, because they're not going to get it forever. And that really stuck with me. And I remember sharing it with my team because it was a really, really good point. So where we do have obviously lease renewals where we are trying to, keep it a bit under market rate for a good tenant, like how are you still doing that, or are you, what's your thoughts with lease renewals?
No, I am. So, so when when it's a balance, so if I've got a property which is well and truly under market, it depends on that individual owner. Like I've got one property which is under market right now. The tenant is amazing, it keeps the property immaculate, but we're now at the point with the last CMA, it's $200 a week under market, so the tenant cannot afford to pay that $200 a week. So I've had that conversation with the owner where he said, okay, look, we'll increase it by $30, which sort of like covers the slight increase in my rates. Give her another 6-month lease. And then I've had to explain, well, you cannot increase the rent in the next 6 months. So you might as well give her a 12-month lease or you're going to actually have to tell her to vacate at that 6 months and then put it back to the market at full market rate. So we've gone with the 6 month lease, and he's leaving the options open, but it is actually meaning that we're having to terminate good tenants to be able to get full market rate, because again, one of my favorite sayings is that landlords are not charities, so it's a business. Even though you want to be able to balance it out with keeping good tenants in there, if you don't get your money while you can get it, when the market drops, as we all see it do, the first person not banging on your door to get the rents reduced are your tenants, and they're not the ones banging on your door to say, please, we know we should be paying more, so it's looking at that overall, like I said, the long-term picture, writing these things out. But I work for my owners, and I'm firmly on the side that investors should be maximising, their best returns possible, so still balancing that with the humanity of it as well, so that, talking about, the lease renewals. I'm the same as what you girls are saying. When we leased these 12 months ago, we leased them quite high. Most of the ones I'm doing, I'm actually just renewing them at the same rate of rent. Some of them, they're a bit lower. The biggest issue I've got with is more agents that have got larger portfolios that don't really know the area. They they come in, they're dropping properties back onto the advertising again at basic prices that are 2 years old. So then when we're now trying to do CMAs and we know, well, hang on, I know that this property is genuinely worth, let's say, $750 a week, but we've got someone who is not even in the area advertising for $650. So it's things like that you've also got to balance and say, well, is now the time to also try to say, today, because of what's advertised today, do we really want to upset this tenant and tell them to go looking today? Because, as opposed to maybe leaving it until someone rents and then look at what else is back on the market again. So you do need to have your finger on the pulse of this literally on a daily basis when you are marketing these properties right now. So, so it's not, and as Deborah, I'm sure you were saying, you're looking at this every single day, every single time you list, you are looking at exactly what's out there, what people are doing, getting annoyed at the other managers who don't know what they're doing and listing under the market, which makes it harder for the rest of us and harder for us to get the best return for our investors, who we're working for, and our owners. So
yeah. Alicia, what are you finding any pain points with investors at the moment? This is more just to sort of share like what we're experiencing. Like, are you getting like a common question or a common misunderstanding or anything like that that sort of you'd like to,
Yeah.
explain further?
Yeah, definitely. My one at the moment would probably be, and I'm not sure of the other ladies, is most investors are lucky to break even on the cash flow of the investment. Most investors that I deal with still have to put a level of their own personal funds, whether it be into the mortgage, or if the mortgage is lucky enough to cover if the rent's good enough to cover the full mortgage, then maybe the investor has to pay for all of the maintenance and all of the repairs. Whereas there's a big misconception out there that investors are making all this money and there's so much cash flow and they don't have to put any of their money in there. And which is a really hard conversation to have for people looking to invest and don't have that understanding yet, and finding out whether it is the best opportunity for them. I've got one now that I said it might not actually be in your best interest to invest right now because you're on paycheck to paycheck with nothing to spare. Yes, you can loan an amount and get a property, but you need to put into that and you don't have that cash flow. So it's just probably that misconception is what I'm dealing with the most. I mean, and to me, it's just the right conversation to have to say it might not actually be in your best interest. Speak to your mortgage broker and, all of the financials. For me, I want you to get an investment, but for you, it might not be. But yeah, investors, I think are lucky to break even is probably the goal, but really it's the capital growth that they kind of work with.
Yeah. Oh, I mean, I think it's great that you sort of have those conversations with owners about, do you think you'll be fine to afford this one? Because I think that that's something we don't have a lot of. And I feel like property managers can be a really good mentor to investors. Just if it's someone that you want to bounce some ideas of, or I was thinking of buying this type of property, like I always put so much value on property managers and their wealth of knowledge, the experience. They hold the most experience with investors in our industry. It's not the sales agent that has the most experience with investors, it's your property manager. And so they know nearly all case scenarios. They know, the problems that you could expect and maintenance and just a whole lot. So I just feel like if you can find a property manager to be a bit of a mentor for you, that's we all love sort of helping in that regard and making sure that you're buying an investment's going to work for you, because if it works for you, it's going to be easier for us as well. Over to you, Deb. Are you finding sort of any pain points or any conversations that you're just having to make sure that you're having with these investors to get them on the right page?
Fees.
Yeah, okay.
So
tell us more.
So many Eastern State investors that are just sort of used to mind-blowingly low fees. I don't know how these businesses are operating. I know that my service and my value is worth more than 4% all-inclusive, 5% all-inclusive. So when we're having the conversations with investors that have got properties in the Eastern States, and then their first conversation or their first comment is, "Oh gosh, I know you guys in WA charge so much more," and I would love to sit down and actually really break down everything for them. $50 a week. If I paid you $50 a week, how much of your time would I get? Would I get an hour? Would I get half an hour? Would I get 2 hours? I don't know. But I can tell you now that each maintenance item that I'm dealing with is a lot more than that. Every time I have to follow up the arrears, maybe it's 1 day late, 2 days late, and you don't actually get told about that because we're working behind the scenes. That's more telephone. There's so much that we do for that money that we don't sort of shout it from the rooftops. We just quietly get on with it and manage and take that stress away from you for $50 a week or $70 a week, whatever it might be. If I flipped it back on you and said, how much of your time would I get? I think we'd be having a little bit of a difficult conversation.
Yeah, I like framing that. I used to always say that when clients sort of felt that WA was expensive, I always reframed it with, no, we were all the same at one stage. They just dropped their pants before we did. Like it's those guys that are reduced, not us that have gone up. We have been the same, I think, since 1981. Our actual fees haven't actually changed. They've always been the standard. So it's a good way that you've sort of formatted that. I think as well, to be honest, I don't think clients mind paying when they know the value that they're going to get. I don't think that's a problem at all. I think that they just want to make sure they are getting that value, they are getting that communication. And if they're not, then absolutely. But yeah, I actually don't find that people want cheap fees. They just want good service. So I guess it's like, how do you show them that you are going to be the best option? And it's so hard to do it in a short amount of time.
But that's an easy sell with an experienced investor. Yeah. That's what I'm finding. Once they've had that rubbish service, then they absolutely see the value in what you're offering. But the first time investors that are just sitting with a spreadsheet and maybe being told by a buyer's agent or as someone that, you need to get those management fees down as much as you can. And it's like $1,000 a year. Are we really quibbling over that? Like, this is a massive investment. This is, a I don't know who can get a property for 500,000 nowadays. 800, 1 million, $1.4 million investment, and you're quibbling over $1,000. Like, it's almost like it's a challenge to get the cheapest fees. But honestly, the clients that have been converting to me after going with those cheaper agents, they cannot sing my praises enough. Like, just, the updates. I did a home open today. I mean, the basics, right? I did a home open, 3 people came through. I don't think any of them were satisfactory, but when you look at the applications, like the communication, the service that we offer is absolutely worth the money that we charge.
It's they say it's like buying a Lamborghini, but then going to the old retired mate for a car service. You wouldn't do. You'd go to the factory people. But speaking of cars, let's go to Sharon because Sharon is a car lover, and
Yep, we're out with the Lambos on Sunday. So yep, so we were out rubbing shoulders with the rich and infamous. So but, don't get me started on Lamborghini drivers. I will upset somebody because they might own them, but they can't drive them.
So if you can, and if you can sort of just finish off our session with, are you seeing sort of any common pain points? I mean, you did mention the maintenance side of things. So is that something that like you're just, not when I say struggling, you're just finding coming up in more conversations?
I did actually, look, this is a controversial thing again. I did actually fire one landlord, an Eastern States investor, because they literally came to me and said they wanted me to get 7 to 10 at a minimum number of quotes to do work. And what it essentially boiled down to is that they were doing everything they possibly could to avoid doing this maintenance. And it was maintenance that was actually going to start to cause health issues for the tenants. So that puts me as the licensee in a really awkward situation because I've got to look after the benefits, look after the health of my tenants, but I've got a landlord that's not wanting to actually do the work, and is then being completely unrealistic about what we can and can't do here. So you are lucky to get someone to do one quote, let alone try to find someone to do 5 quotes, and 7 to 10 quotes is just ridiculous. And then when they start saying things to you like put it on Airtasker, it's not how we work as agents. We just can't air task something. We have to make sure that everyone we use is properly insured, properly accredited, we're properly in our books. We just can't stick a job on Gumtree and say go for it. Just it's not how that works. So, and the tradespeople we do have, there seems to be a common misconception out there that we get kickbacks and paid by them. I wish we did. I'd be
We
driving.
started that rumor anyway.
We did. So, but we do not, but we rely heavily on our tradespeople, and we've got good relationships with them. So when we have an emergency, we can get on the phone and say, hey, responsible electricians, can you get out there yesterday? And they're doing it for us because they look after us, not because we're going to pay them more or they pay us more, because they actually understand our contractors are what make us great property managers because they back us up, so, and they do keep an eye out for us, when our properties, if they do see something that they shouldn't be there, they are telling us. So our contractors are also, part of the service that we have to make sure that properties have been looked after overall. So, yeah.
Okay, question that has come through. What advice, and now anyone can jump into this, but what advice do you have on investing on land or house and land packages? Any horror stories when it comes to building timelines and construction contracts? Deb, you might be, and probably maybe Deb and Alicia, you probably do more of that new housing market. Anything there to add?
Look, they're still great, to get into and get it at maybe a bit of a cheaper rate than an established house. What we're finding now is they're obviously not the delays as there was in COVID. That was just unprecedented. We're definitely, the timelines are 9 to 12 months for the build, so they're not that long, that delayed. But just the landscaping. So I've got 3 properties now where we've had key handover, and we're, because the final payment has been made, builders are kind of going done, and we're struggling to get that landscaping finished, which is so important. Just doesn't present well when you're taking somebody to a house and it's just sand at the front. So look, it's just we I think across the board, Sharon spoke about our contractors and how we work really closely with them. You struggle to get contractors to attend on time, to do a good job. We're really struggling here in WA. I don't know if you're experiencing it as well. We've got our trusted people that we work with, but if we need somebody else, it is difficult to get decent contractors. Yeah, and so that happens with the build, the land and house packages as well, because they subcontract the work out. So everybody is kind of experiencing that in WA at the moment.
I think with the house and land, like while I think it's great, if you have, if you've got a couple of established properties and you are buying in a self-managed super fund or something, and there's a reason for needing that new build, I totally get that. What I don't like about new house builds is for me, it would have, and this is a personal opinion, it would have to be a longer hold, because I think in the short term, with all the other builds happening in that estate, it's going to, it's going to be overcrowded. The second thing that I worry about is that when you do build a new home, you're buying a property that doesn't really have any opportunity. Where an established property, you've got opportunity to renovate it, do a little extension, maybe do a granny flat. You've got opportunity to do lots of different things to make it unique on the market when it's up against 10 or 20 other properties. But in the new builds, they don't come with opportunity. You're relying on the market and that's it.
But I love the new builds purely because there's no maintenance. They're usually built on the smaller blocks, so not as much garden maintenance, which is the bane of my existence. I personally love the new builds because, like I say, I've got quite a few on my portfolio and there's just no maintenance on them, So yeah, I hear what you're saying, Ash, and it is nice. And maybe for long-term investment and capital gains in that area, that is one consideration. But yeah, I love the new builds.
And with the new builds, oh, sorry, Ash. With the new builds, I would highly recommend getting a property manager to look over the floor plan, because I've had some new builds and there is no outdoor entertaining at all, or the entertaining is that small you can't even fit a table, and it's purely the builders are making affordable packages, but by the time it comes to actually renting out this house, like I had one, there is zero undercover entertaining, no paving out the back. The living area is one tiny dining area, and that's it. That's not a good investment. We can only fit a couple in there, maybe with one young child. That's it. There is no growth or anything in that capacity. So just get a PM or someone to have a double check over. And it's my opinion that you shouldn't just build a house for the sake of building a house that's not going to be attractive to a big, broad range of tenants, because they built it what was in their budget, but I don't think it was a right decision at all. Even the reselling value of it, it's just not ideal. That's for sure.
Yeah, no, I like that. Thank you so much for your time. You guys are always a wealth of knowledge to have on, and I hope that that does help people with that extra on the ground experience. And Sharon, Deb, and Alicia, work in lots of different areas of Perth, so this is definitely a good overall on the ground sort of experience. So ladies, thank you so much. I appreciate it. Everyone's got their details if they do need to reach out and ask them any more questions. Otherwise, I'll see you guys in another 6 months for another update, and we'll see how many properties are sitting in Baldivis at that time. That'll be the goal.
Burning question.
Thanks, guys, for listening.
All right, thanks, guys. Thanks, everyone. Bye.
Bye.